Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with a scenario that I have seen pop up at some places, which is a wave 1 WXY and a wave 2 for then a bigger wave 3 towards the upside for higher prices to come. The reason I don't like this scenario is because of this wave 2, because you can see we have a WX and a Y. Now by itself, a WXY is a correction that can happen in a wave 2. That is not the problem. The problem here is that this WXY corrective structure is a sideways structure, and in a sideways double combo WXY, wave W and wave Y are not allowed to be the same structure. Now inside a wave W, you can only have a zigzag or a flat structure, and inside a wave Y you can only have a zigzag, a flat, or a triangle. Because wave Y over here looks very much like a zigzag, as it is clearly not a flat and clearly not a triangle, wave W is therefore not allowed to be a zigzag, meaning wave W then has to be a flat, but clearly this is not a flat, and for this simple reason I do not like this particular scenario, as inside a wave 2 we have a WXY where W and Y are the same, which is not allowed in a sideways double combo. That then gives me or brings me to this scenario where I have a double 1-2 scenario. So in this scenario we have a wave 1 followed by a wave 2, which can be any corrective structure except for a triangle. Then you have another wave 1 and another wave 2, which again can be any corrective structure and can be the same as the first wave 2 as well. So both of these can be zigzags in this case. Now we also had some bullish CVD divergences between the lows of the wave 2s for some extra support. It basically means that market shorts were absorbed by bigger limit long positions to push price towards the upside. Now in this scenario, you can see that we reached the blue 3 fib, which is taken from the low to the high of 1 to the low of wave 2, which is an extension for wave 3. More commonly, the 618 fibs are respected. So over here we had the 1.618, which was respected. We kind of pumped through the 2.618. Now we're at the 3, and then you could look for the 3.618 sitting at 36k, which in general is an important target. We also have additional resistance there sitting between 35.9 and 36.2k. So it's definitely an area of interest, where eventually what you want to see in the bullish scenario is a range for a wave 4. Now because this wave 2 took around 9 days, you expect the range of a wave 4 to be around at least 9 days as well. Wave 4 most commonly is a flat structure or a complex structure. If wave 2 is simple and deep, which it tends to look like, a zigzag and quite deep as well, wave 4 most commonly is shallow, long, and complex. So that is something that we can look out for. Now, as long as price pushes without giving us a range of at least around 7 to 12 days, then the higher probability is that wave 4 is not yet ongoing and we still have to wait for a bigger range to form, meaning a bigger drop. The higher price goes, the higher you pull these fibs. These fibs are pulled from the low of 2 to the current high of 3, but of course the higher price goes, the more you just simply move these fibs to the upside, and this is the most common target for a wave 4, the 236 to the 05, most commonly the 382 to the 05 over here, currently sitting at 31.8k to 30.9k, with the invalidation of this bullish scenario sitting at 29.8k. So if price would do this, then we have a problem. This is also the biggest difference between the bullish and the bearish scenario. In the bullish scenario, you want to eventually see a wave 4 support and move up, and in a bearish scenario, you want to see continuation down and not take the high once again. We'll get to that scenario in a second. If we then zoom in to the 15-minute time frame over here, then I have this bullish scenario where here we then have an A, B, and a wave C to the downside. In this particular scenario, wave C reached the most common target area for a wave C, which is very nice indeed, very, very nicely respected. And then you're going to be looking for a wave 1, WXY and 2, and continuation in a 3. However, you can immediately see that I have a wick over here, which went through the invalidation for a bullish scenario, an impulsive scenario, because price is not allowed to take the low of a wave 1, which clearly is the case on my chart. Now, I do realize that other charts do not have that same wick, as you can see over here, for example, but on my chart we do have that wick, and for that reason I do not like the impulsive scenario where we are already looking for a wave 3. It definitely increases the probabilities that at some moment in time other charts will also take this low over here. Besides, this move to the upside, as shown in the previous video, doesn't look nice as an impulse, which in general increases probabilities. You're still going to take this low. And if you do, then on the 1 hour time frame, we do have at least this order block over here, which on my chart now got tested twice. This red candle functioning as an order block. And we have a key level over here, the low 32.5k, which is also the beginning of this gap, which can definitely act as support for then continuation to the upside, because the probabilities are still higher to, in general, take these highs as well, because this looks very much like a corrective structure and not an impulsive structure to the downside for much lower prices. If we then zoom out again, go to the 4 hour time frame, then in the bearish scenario, we're looking for a 3-wave structure to the upside. So in this particular scenario, we are then looking for an ABC, where wave A is an expanding diagonal, 1, 2, 3, 4, 5. Then you have wave B retracing to the 382, and then you have wave C, which can still be a 1, 2, 3, currently working on 4. Then you get a wave 5 to the upside before continuation down, right? Remember the bullish scenario, you do not want to see the invalidation hit, but in the bearish scenario, you look for continuation. A less common target, however, still a target for a wave C, is the 1.618 taken from the low to the high to the low of B, sitting at 36.3k. So again, the 36 to around 36.4k, very, very important for both bullish and bearish scenarios. But in this scenario, you could have a wave 1 and 2 here, 3 ranging in 4, 5 and down. If we then zoom in more locally and look at the, well, more bearish temporarily, because you still expect the highs to be taken, this more bearish scenario leads to a more complex 3-wave structure in either a WXY, which is the blue count, or an ABC, where I only put the most common target for a B over here, which is between the 1.236 and the 1.38 pulled from the high to the low of W, which is sitting between 35.6k and 35.9k. However, as long as we are not getting close to these highs over here, that scenario has a lower probability. So that's why I prefer to speak here about the WXY, where you have an ABC in W, then you have a wave X potentially already finished here, by the way, which then means that this move to the downside, this can be an A, B, and then a wave C in wave Y, because in a sideways double combo, there we go again, wave W and Y are not allowed to be the same, and as W looks very much like a zigzag, wave Y has to be then either a triangle or a flat scenario. So this is something to at least keep in mind. Now, common targets for a wave X are the golden pocket to the 886, but also the 05 and the 382, which have been hit over here. And it's always quite difficult to know when a wave X is exactly finished, especially in a sideways structure. So we have to wait and see if this is going to be something like this. Well, then the probabilities are high. We're already working on a wave Y, and we're going to have this over here. Fill the wick as well. Go to the key level, most common target for Y, between 32.6k and 32.1k, which also means you're going to hit the 1 hour gap for then support, looking for a push towards the upside, where always we want to see proof of support, whatever it is that you're looking for. Market structure change, bullish CVD, RSI, stochastic, moving averages, whatever that is. Now in this range, you can see over here, we have now a triple top actually, high number 1, high number 2, high number 3, where also high number 2 did not take the first high. It missed out by literally $1 or something. So we have a triple top over here just above price. Also this resistance area where we have the value area high of this range, the golden pocket as well, sitting between 34.375, which is the triple top high then, and 34.5k. So an important resistance area for price. If it clears this area, probabilities increase that we might look for a new high here, where we could think about an ABC structure, right? So that's at least important to keep your eye on. We have CVD divergences. We have the bullish CVDs over here and the bearish one. And it's a little bit awkward, not gonna lie, because on my chart, we have a higher high, and actually on most charts, this high is lower than this high. But on the AGGR chart, the CVD chart, you can see the first high is higher than the second one, which kind of means like reading CVD is a bit more difficult, I suppose, because with this little retracement here, we do have bullish CVD, higher low in price, but look at the yellow line, much lower low over here on the yellow line, bullish CVD divergences, but also on blue, lower lows on the CVD. So The question is, will you only read this part of the chart now, where then you have clearly bearish CVD divergences as well on yellow, and the blue one over here is bullish CVD, but the bullish CVDs on blue will play out the moment you take the triple top. And then you have the bearish CVD in yellow left. But then you are leaving out this pivot here with these lows. So it's a little bit awkward to read and know exactly what the highest probability scenario is regarding the CVDs. I think highest probability is taking the triple top here, and then we simply got to wait and observe what price does here. Again, proof of resistance, that is what we're going to look for. We do have news later today, 10:35 p.m. Central European time, so make sure you trade safe around these hours. And if we then finally look at the probabilities, then on the low time, I prefer, regarding the bullish scenario, the double 1-2 compared to the one where you have a WXY in wave 2. And between the bearish and the bullish scenario, well, at the moment as it stands, on the information that we have now, seeing continuation, taking this high at least once more is a higher probability until we see clear signs of weakness, of course, without any proof of support if price moves down. Keep an eye on bearish CVD divergences as well, as these can give a good indication of what might happen. And on the micro, the highest probability scenario at the moment is the scenario where we are still gonna take this low at least once more, in currently looking for a WXY, but if we get above the target area, we might be looking for this resistance area, which is actually very close to this target box, which is 36K. So very, very interesting indeed. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.